with Gary Jenkins. He's head of credit research at Evolution Securities, joins me in the studio now. And so, Gary, what do you want to see from the G20 summit in Cannes? What sort of clarification do you want on the details that still remain?
Well, I think there's a lot of detail that we'd like to see, that the market would like to see, but I doubt we're going to get it in the short term. I find it difficult to believe that by the time of the G20 meeting they'll have dotted all the I's and crossed all the T's. And at the moment, really, we don't know much more than we did before the Grand Plan, to be perfectly honest. Everything that they proposed in the Grand Plan was pretty much as expected and could have been proposed 18 months ago. We've got no detail whatsoever. They've got no new money. So really, we're just sitting in the dark waiting for the proper detail of the plan and then how they'd implement it.
I guess after the initial flush of optimism, investors and analysts have now decided, actually, on closer inspection, this plan simply doesn't go far enough. So we're suddenly seeing this risk-off mood in the markets. And then to top it all off, we had the Italian bond auction on Friday with 10-year borrowing costs heading towards 6%. What do you think about that?
Well, you're right, it's the traditional reaction where it's all very exciting at first and then everyone calms down, sobers up and realises that actually nothing's changed. With the Italian bond auction, I found that very interesting because the way it was reported and the way people spoke about it as if it was a complete disaster, but I thought it was just a logical way of approaching it from investors, because if you think that you could get a guarantee on the same bonds or new bonds in a couple of months' time issued by Italy, why do you want to buy these ones? Why not just wait? There's plenty of Italian bonds coming down the pipeline, and if you can get them with a guarantee, even though I think the guarantee is worthless, but if you think you can get them with a guarantee, why not take it? Why not wait?
Why is a guarantee worthless?
Well, when I was young and when I studied how to do credit analysis, I was always taught that if you actually needed a guarantor, there was a reason for that, and you had to analyse the guarantor as if it was the principal, and what would the situation be for the guarantor under the circumstances that the principal goes bust. If Italy goes bust, there's no way in the sweet world the EFSF will have the willingness or the ability to repay anyone. So I think it's just a bit of a joke. But it's a confidence trick with the emphasis on con. If it works and it makes investors feel better, that's great.
You're saying that the cost that Italy paid at the bond auction last week is pretty much justified because, you know, if you think that this insurance scheme is going to come into play, then you're going to wait till you have some sort of guarantee. But on that sort of, you're basically assuming then that borrowing costs are going to continue to rise.
Not necessarily. It just depends on the exact detail of how much money they get from outside the EU and exactly what the plan is, whether it's a 20% guarantee, 30% guarantee, how it's backed, is there any collateral, how will it work? We just don't know, and until we know that, then we're all in the dark. But what I would say is that if it was me, why buy Italian bonds today? Wait until at least you know the detail of the guarantee structure.
And so if we were to see more of a commitment then from emerging market countries, whether it's China or Brazil or other Asian countries like Japan, to make more of a contribution to the EFSF or indeed to a special purpose vehicle, whether that was managed by the IMF or some other body, would that give you more confidence? Would that be reassuring?
Any outside money coming in is going to give people more confidence. Any outside money coming in is a positive. However, ultimately I still think the EU will have to solve this themselves by going a lot closer to a fiscal union than relying upon outside parties for their cash.
All right, thanks very much indeed. Thanks for coming in. Gary Jenkins, head of credit research at Evolution Securities.